Welcome back, folks. Live trade case study on Bitcoin. Okay, I'm sure a lot of you want to know how to trade Bitcoin. It's a market that I don't trade at all, but I wanted to show you that the same concepts work in the crypto market. A little bit more volatile and probably has a lot more manipulation. Okay, however, the knowledge of price action can also be used in crypto, especially where that crypto is on large exchanges and there is a lot of institutional interest and a lot of volume. Okay, that's important. Bitcoin is obviously a mainstream digital currency that is on multiple exchanges and has institutional interest as well as large funds. Okay, so all I'm doing here is looking at liquidity. Okay, previous daily low has been taken, right? These two down candles are the bullish order block that has taken liquidity. Okay, and we also have a bullish breaker, right? So we have bullish order block, bullish breaker, as well as a fair value gap. And we've taken previous daily lows, okay? Now, I don't know much about the timings for Bitcoin, okay? I'm not sure if it trades on, when it closes today, being that it is Sunday. But I wanted to do this live trade example. I've only got a small lot on, so I'm not too concerned about it, okay? I wanted to do this live trade case study to show you that the same concepts apply because price is price regardless of the asset, right? The underlying asset is irrelevant. Okay, so we can see equal highs. Okay, that's where my current target is. So I've taken a long position, okay, at these lows, and I'm targeting these highs. So that is 63,600. Now on my platform, the prices are a little different. Okay, on my platform, that is 63,541. Okay, so that's okay. It's the same concepts. I've bought at the lows, and I'm going to be selling at these highs. Slight difference in pricing is irrelevant. That's going to be different on different brokers. Okay, so I'm going to now stop recording. One last thing that I will mention is that this is essentially a dump for the pump. Okay, that is the premise of the trade, and we obviously have a lot of liquidity resting above. Okay, we've taken a key low being the previous daily low, bullish order blocks, bullish breaker, and bullish fair value gap. So a few confluences there, but I like to enter long positions. The best setup's always going to be at previous daily lows. Okay, so I'm going to stop the recording. I just wanted to talk about the entry live with you, and then once this trade's closed out, hopefully at these highs, then I will journal that and release this video. Okay, welcome back, folks. Just wrapping up the video on the Bitcoin trade. You can see that we have achieved the target level. Okay, we've taken out these equal highs, and I have journaled that trade on my Twitter profile. Okay, there it is there. Okay, and only a small lot, okay, but a bit of spending money that I was able to produce over the weekend with very little effort. Okay, now let's talk a little about the entry. I entered on a 15-minute chart, okay, as the market was coming down into this zone of price here, which is the fair value gap on the left-hand side, okay, right there. Now, let's talk a little about stops, okay. Stops are at the lows, right? Bitcoin's quite volatile. Now, it's a personal choice how one manages their stops. I like to see stops on a closing bar, okay? I want to see the market close below my level where I want to exit, okay? But I don't use hard stops, okay? That's my personal choice. And if the market does go against me, then I'm analyzing, okay? I don't close out the trade unless I do feel that it is going to reverse, meaning that, I'm completely wrong on my assessment, okay? Now, I also take into consideration what the market's doing, right? Price action. So I assess price, right? When price moves adversely against me, okay? So here we can see, for example, there's equal highs that the market's taken, okay? Equal highs that the market's taken, right? Now here, it's engineered equal highs, right? So with higher probability, we're going back up there. So this little move down, right, at the start of the day is not going to scare me out of my position because that's what it's designed to do, right? After creating and engineering these equal highs, as well as these equal highs sitting up here, which is my ultimate target, okay? Now, that's a personal choice. That's how I manage my stops, okay? You need to decide for yourself how you manage your own risk. What's your tolerance level, okay? So let me jump to a 30-minute chart because I also look at different time frames, okay? And you can see on this 30-minute chart, we don't have any body closures, right, after the entry. So my entry is inside of this fair value gap, okay? And you can see that this move down, body closures are still above, right? That's important. I look at that, okay? Now let's have a deeper analysis on this market, right? As a gift from me to you for all the comments and video likes that you guys have been doing on my videos. I'm going to jump into a daily chart and I'm going to show you something. Okay. Now, remember, anything I say in this analysis is not a trade recommendation. Okay. I'm just showing you how, with this knowledge, you're able to read price. Okay. It's all about price action. The market moves down, right? Essentially, when I see a market move down, I'm looking at what is it reaching for. Okay. And there's a lot of liquidity under here that the market has reached for. Also coming into this wick. Okay. Right there. Now, as it's coming down, I'm looking to see, is there any kind of a reversal, right? Are there any highs? Is there liquidity residing above that the market may reach into after it has reversed? But I want you to look at this price action from that section of price there. What do you see? Because you have learnt this. And I'm trying to show you that regardless of the asset, price is going to be price. Okay, you'll see the same setups. You have a up candle preceding this move down. That move down is designed to take out any existing longs, right? Stop them out. As well as coming to this to balance the market, okay? Balance price. Now, what do you see happen after this move down? You see this move up. And these 3 down candles, that is the secret right there, okay? You've seen me talk about 3 down candles, right? I've mentioned it in many videos. 3 down candles or any time frame are important, okay? Now, what do we see here? What are these 3 down candles coming into? We have a bullish order block, this down candle coming into this fair value gap and rejecting, right? More importantly, we come into this last up candle that I have spoken about on many of my live trade execution videos, right? We go down, up, 3 down candles into multiple bullish ICT signatures, right? We have this swing low, okay? This swing high, right? A lower low, but then a higher high that goes above this swing high on the left. That swing high on the left created this low that we are now back above and pushing down into the up candle, which is our bullish breaker. Isn't that amazing? The same ICT concepts working in the crypto market, right? So that would have been the perfect long entry on this daily chart with an expectation that the market will move back up to these equal highs, which is where it seems to be headed, and maybe even these equal highs. Okay, so study the concepts on my channel that talk about these ITC signatures, because you can use those concepts on any asset. Okay, so repeating, we have this up candle preceding this move down. Okay, how far that goes is irrelevant. You don't even need to know that. You don't need to know where is that reversal going to come in, right? You don't care. You're waiting for the confirmation. The confirmation is when the market goes back up through the bullish breaker, which is that up candle, and then pushing back down into that bullish breaker. That's all you're waiting for, right? You can see a few other things on the way up. You can see that the market is creating a fair value gap, indicating strength. Okay, this down candle is engineered to allow institutions to get in on that fair value gap. Okay, that is our bullish order block. Okay, that is coming into this down candle, which is the original bullish order block inside of this fair value gap. Okay, then these 3 down candles are pushing down into that down candle, which is our current bullish order block. Okay, as well as coming into this up candle, which is our bullish breaker. Okay, what have I taught you in the last few videos about this fair value gap? We have, let me make the chart a little bigger. Okay, there we go. We have this fair value gap. What have I taught you about that fair value gap? Where are the institutions getting in? You have the high of this candle, that's candle 1. You have this middle candle, candle 2, and you have this third candle, candle 3. Candle 1's high does not overlap with candle 3's low, okay, which means there is a fair value gap in that middle candle, okay? The institutions are getting in when the market trades below candle 3's low, right there. That is the institutional order flow entry drill, right? Right there, the institutions are getting in, okay? That is a very high probability setup where we can expect repricing higher. That's where the majority of large fund traders and institutional traders have entered the market long, okay? That I've taught you. Isn't it amazing that these same concepts work on crypto, on Bitcoin? How cool is that, okay? The safest entry is going to be when the market moves through the bullish breaker, which is this up candle, okay, and pushes down into that up candle, right? That's the safest entry. because then we can manage risk. The market should not close below the low of that up candle. Okay? Then expectation would be from that bullish breakout entry, right? One can expect price to reprice higher to take out these highs and potentially go higher. Okay? So the lesson here is to encourage you to learn the concepts that I'm teaching you on this channel that will work in any market. Okay? Hope the video is useful. I will now talk with you in a future video.